Hey everyone, welcome back to the channel. I'm Mercedes. If you're new, welcome. And if you're a returning subscriber, as always, welcome back. So in today's video, we're going to be talking about the steps that you should take before going into homeownership or before you can possibly go into homeownership. I'm going to share with you guys my journey. I'm going to give you guys some tips, and I'm also going to give you guys some advice on what not to do that I did, the mistakes that I made. So let's go ahead and get right into the video. Okay guys, so the first thing I did when it came to buying my home was I saved. No, scratch that. The first thing I did was get a budget. Yes, I started to budget my finances back in January of 2018. This budgeting allowed me to pay off debt, save money, and understand how much money was coming into my home and how much money was going out. This is vital for you to know exactly what you can and cannot afford when it comes to home ownership. The next step was paying off debt. Even though it goes in with budget, it is its own step. Paying off debt is going to allow your credit score to increase, hopefully, as well as decreasing your debt to income ratio, which is super important in the homeowner process. What do I mean? All of those minimum payments that you're paying towards debt, guess what? Any mortgage lender is going to add up those minimum payments and tell you how much home you can afford based off of those minimum payments. So let's say you have a $50 credit card minimum payment here, a $100 minimum credit card payment there, and a $300 student loan payment, as well as a $300 car note payment. They're going to add up all of those minimum payments, and that is going to be included in your debt to income ratio. So it is important to get your debt minimum payments down. That means paying off debt. You don't want to go into homeownership with a lot of debt payments. It's just not a very responsible thing to do, and it's not going to get you the most house for your money if you go into it with all of those minimum debt payments. When I went into homeownership, the only debt payment that I had was my student loan debt of $290 something or $60. I don't remember. I ain't paid student loans and I don't know how long, y'all. But that was my only debt to income ratio, was that student loan debt that I had. Now, if you have a car note and it doesn't matter the actual balances of your debt, it matters how much you're paying on a monthly basis to your debt. But if I were you, I would eliminate as much debt as possible before going into homeownership, because it's going to increase your credit score and it's going to reduce that debt to income ratio, allowing for more house for your money. Once you got your budget, once you've worked on your debt and you paid it off, now you're paying close attention to your credit report. You need to pull your annual credit report, see what's being reported on your credit, if there's any delinquent accounts, anything on your past due, anything like that. You need to figure out how you can clear these off of your credit report. Not in a way that you're owning a debt or you're taking full responsibility for a debt that you may not be aware of or anything like that. You can speak with a debt consolidator if you choose to own that debt. That is on you. There are many different avenues that you can take through, people who do credit assistance, or you can do it on your own. Just make sure that your credit is good when you go into homeownership. Your credit should be no less than a 580 when it comes to purchasing a home. That is the approval credit number, 580 or more. I would always recommend a higher credit score. So the higher you can get that credit score before homeownership, the better interest rates you're going to be offered, the more odds of approval with a better credit score. So we got our budget, we got our debt, working on our credit score. It's looking real good. It's looking like our odds of approval are increasing. If they weren't there, they're getting there. Now you have to think about how you're going to purchase this home. And what I mean by that, there's so many different avenues to purchasing a home. You have a USDA loan, you have an FHA loan, you have a conventional loan, and I believe there's some other ones as far as like military and things. If your family is a part of the military, you or your spouse, you have veterans loans and things of that nature. If you're like myself, I'm a single mom, it's just me, and I did not have 20% down for a down payment, so a conventional loan was just not the option for me. And I could have went with a USDA loan or a FHA loan, and I chose to go with the FHA loan because you only had to put down 3% for an FHA loan, which is probably the lowest down payment you can put down. Now, the only thing with an FHA loan is you do get a monthly charge for PMI when it comes to your home, which is a risk insurance that the federal government places on your monthly mortgage. In case that you default or anything, then they're backed and covered through that monthly PMI, and that is for the lifetime of your loan. That is the downside of an FHA loan to me. If I could have came up with 20%, I would have definitely tried for a conventional loan, but it's no worries if you cannot, get to a conventional loan, a FHA loan. A lot of people do FHA. You're not the only one. You're not alone. So I chose an FHA loan. So I knew that that was a loan that I was going to go for before I even applied to see if I was approved for a home loan. I knew that I was going to go FHA. So the first person that I tried to get approval through was Navy Federal. And I felt like if Navy Federal gave me a pre-approval, then I have a good chance of getting an approval with others. And I'm not an ex-military. I don't have any, military spouse or anything like that. I just have a checking and savings with Navy Federal. So I chose to apply through them first. And what you want to do when you're applying for lenders is apply for them all in the same time period. So when those hard inquiries are hitting your credit report, it doesn't look so bad because they're back to back, and sometimes it just depicts as one, I believe. Don't quote me on that, but I know it's better to apply for your lenders at one time opposed to separating them out by months or so. And another thing that I can tell you is if you are looking for any type of down payment assistance, you want to do a down payment assistance program, you want to get help with your, down payment, closing costs, and you've researched the different programs, you have to go with a lender that offers those programs. That is the mistake that I made. If you're a first-time homeowner, low income, single mom, any of those things, you automatically qualify for down payment assistance programs. I myself qualified for a down payment assistance program. I was just naive and went with a lender that did not offer or participate in the down payment programs. So I missed out. My first time home, being a first-time homeowner, I missed out on free money. Now, I did do my research in regards to the down payment assistance programs, and I did find like different criterias and requirements for the down payment assistance programs that I myself would probably not want to deal with, as far as having to live in your home for a certain amount of time, not being able to rent out your home for a certain amount of time, or having to owe that money back if you didn't follow certain criterias. Now, if you sell the home within 5 to 7 years, you can just take that money that you're going to get for your home and just pay it back. But it's like, if I'm going through the process of actually applying and doing what's necessary to get this payment assistance, then I want to see it through, you know. I don't want to have to pay it back, but it's not a big deal if you do decide to pay it back. So I would definitely recommend you look into down payment assistance programs, look at their requirements, criteria, see if you qualify, and take advantage of it. I didn't, and I regret it. So definitely take advantage of the down payment assistance programs. Now with that, you do have to utilize a lender that utilizes the programs that you choose. Make sure that when you're applying for lenders that they participate in these programs. Not every lender does, and that was where I went wrong. So that's my advice to you. Don't do what I did. Make sure that the lender that you're going through actually participates in whatever down payment program that you choose. Key, okay? So you know your lender, you know what type of loan you want, you know these things. Now you have to make sure that you stay on top of everything, that your credit is good, your payment history, everything, you're doing everything right, because until you make it to that closing table and sign your name on that dotted line, your lender can tell you you're not approved at any time. And every realtor that I was talking to told me all of the horror stories of how people would make it to the closing table and the loan would get canceled because they missed out on something when it came to the approval. They did something wrong. They, bought furniture on credit. They increased their debt to income ratio within the process of building their home. There's so many different scenarios that can happen. So you have to stay on top of your finances. What you go into that pre-approval with is how you need to come out of that pre-approval with. You don't need to make any sudden changes on your credit, on your debt, anything. A lot of people go out and buy new cars. Don't do that. A lot of people go out and buy furniture before they close on their house. Don't do that. There are all types of little things. If you missed the payment back in January, but when you apply for your pre-approval in February, that payment hadn't hit your credit report, make it known, because your lender is only going to run your credit at least 3 times. So pre-approvals do not guarantee a loan. Pre-approvals are basically a quick process where the bank is like, oh, okay, this checks out, this checks out, this checks out, this checks out, but they're not looking in detail. They're not really going in and paying attention to every little thing. So a pre-approval does not automatically mean a loan, which a loan for a house, that does not mean that. So when I tell you, you want to make sure on your own, not wait until the bank tells you, make sure on your own that your credit is up to par. Your debt to income is almost at 0. Your history, your credit history, not just the score, but your history. Make sure that this is not going to affect my credit. If I have something bad on my credit, making sure that that's not going to affect my credit. You want to have your ducks in a row. You don't want to have to wait on a bank to tell you, oh, well, we thought you were approved, but we seen this. Or we thought you were approved, but this job doesn't count. You want to make sure every scenario is marked off your list and your approval odds are at its highest. So when you get to that closing table, you don't have to worry about them telling you, oh, I'm sorry, we can't close because of this. We can't close because the loan didn't go through. Though that is the worst. You've spent 8 months telling your family and friends, oh, I'm buying a house, I'm building a house, and you choose the floor, you choose the cabinets just to have to walk away from the home because you depended on a bank to tell you if you were approved. You didn't make sure that this is together. I got this. I know I'm going to get approved because I got a credit score of 700. I got my down payment ready and more than ready, because I don't need them to tell me that I have to put down more than 3% for whatever reason. I need to make sure that everything is together. So that's what I did before I went into buying my home. I made sure that I had it together. I made sure my credit score was good. I made sure that I had enough money for down payment and closing costs. If I didn't get any assistance, if I didn't get any help with any type of incentive from the builder, from the person that you're buying from, if they didn't want to help with closing costs, I made sure that I had all the money to take care of it. Even if I would have went through a program, I still would have made sure that I had the money to take care of it. I made sure that I had my income together. Now, just because you work 2 jobs, that does not mean that they're going to allow you to use both of those jobs. I could not use both of my jobs even though I had worked for 6 months on both of those jobs. I could only use my full-time job because I hadn't been at both of the jobs for 2 years. So these are things to note. Just because you go pick up a job for 6 months, you think you can use both incomes. No, you have to use your income for the career. It doesn't have to be the job that you've been on the longest. I wasn't on my full-time job longer than my part-time job, but I did graduate from college and I utilized my degree to get the job. So they used that job because it was a part of my career path. It was a step up. Now, if you're an insurance agent, and let's say you go and you work for another insurance agent, if you're making more money at the new insurance agent, they'll utilize that job's income. But let's say you were an insurance agent and then you go to a cashier, they're not going to find you as a strong candidate because they're going to be like, how did you go from this to this to this? Why are you jumping around in career? Why is your career path not leading to steps up, but more so just another job in a whole nother occupation? They want to see consistency. So I went from an insurance agent, now I'm a broker. That's okay. They want to see stuff like that. So that's what I did. I hope this video was helpful for you guys. I hope you gained some information on just getting started. Start the process with you. Started with your budget, started with your debt, started with saving money, and then move on to what kind of loan do I want? Who do I want to house my loan? Who do I want as a lender? Review, research lenders. If I want to do a down payment program, what lender participates in this down payment program? Know these things, research these things. So when you go and get that pre-approval, it's just a step. It's just a step up into your journey of home ownership. You know you're going to get that home because you did everything you needed to do. I hope you guys enjoyed today's video. Go ahead, give it a thumbs up, comment down below, and I will see you guys in the next video. Bye guys.